Lars Christian, welcome back for the second time. It's an absolute joy to have you back in the studio again. Thank you so much for taking the time.
Thank you. Thanks for the invitation to come back. What is it, 3 years ago?
Yeah, I think so.
Yeah.
Maybe 2.5 or something like that.
2.5, yeah.
And knowing you, I've been busy at work as usual. So what's like the quick status report on Belships? Has it been a busy year, or is it possible to summarize 2024 so far?
Yeah, I think we've been keeping ourselves busy for a few years in a row, actually. So, yeah, a lot has happened since we met last time. Yeah, we can go into detail on several fronts. The operation has changed a bit. We've added business. We've actually sold parts of the company, and then we've grown the fleet. So yeah, it's been busy on several fronts actually last couple of years.
And any idea of the consequences of the elections we have had so far, or is predicting markets based on president's exercise not worth doing at all?
I think it's an entertaining question. It's possible to maybe speculate around, but we actually don't spend too much time speculating in presidential elections, and I think it goes back to our principle of trying to manage risk rather than trying to predict the future. We're in a very global international market, and we're not really in a position to dictate rates for our ships. We take what is in a pretty efficient, big, fragmented market. And on a short-term basis, it's near impossible to actually predict the rates. So, linking that to the U.S. election, I think is perhaps not fruitful. But I think it shows that one has to be prepared for volatile environments in economic or politics over the last 5 years. I think ever since the pandemic or outbreak of war or economic changes, a company, especially in shipping, has to have certainly a view and a position on how to approach, let's say, the risk part of it. So we're more focused on risk than predicting. So we don't have a political view.
Makes sense. So just to recap a bit for new listeners and viewers, you took over Belships in 2019, and it's quite a unique company with a very long history. Can you just summarize a bit what was the challenge when you entered Belships in 2019? And from my point of view, it's been an incredible journey 5 years into it. And why do you think it has become such a success?
Well, that's kind of you to state the question in that way. And I would agree that Belships is a unique company. It's more than 100 years old. It has been stock listed since 1937, and it remains the same company is still stock listed on the Oslo Stock Exchange, and I believe we're one of the 10 oldest in any sector, 10 oldest shipping companies still stock listed. So just the history and the ability to survive a century, and on top of that being in the shipping business, I think is rather unique. As you say, I joined early 2019, so it's approaching 6 years ago, and the main challenge at that time was very specifically, we wanted to make the company investable and become more of a bigger company, more investable for a broader number of investors. So we wanted to grow it. That was the first and foremost objective. And then out of that, obviously, Belships was already a shipping company. It was already owning dry bulk vessels, and it had a technical management company. So it had certain assets, and it certainly had a strategy. So we just wanted to add actually scale and some growth behind it. And then we decided to invest in more ships. That came from a market view that we felt it was an opportune time to make ship investments within dry bulk. Very interesting point in time in history, because there was a decade past where there was actually a decreasing amount of investment into new ships. So we felt that this at some point has to turn. There was a growing topic of the green shift, which is an opportunity, but has also presented lots of confusion to the market. And then generally there was a decreasing number of shipyards and shipbuilding capacity. So all of this together in 2018-19, we were pretty convinced in the investment opportunity of dry bulk ships. So that was number one. Number two, why Ultramax ships, which our fleet is solely consisting of Ultramax ships. And this was for the simple reason that, again, back to predictions of short-term market rates, we don't really do it, and we're honest about that. That's not our competitive edge. Over 10 years or 20 years or 30 years, there are multiple cycles in shipping which are positive or negative. And one way of reducing the downside, which obviously is there if you invest in a ship, is that economy of scale has been the kind of overriding theme for 50 years. Always the ship sizes have increased, and this is because ports and trades develop, and basically the long-term competition here and what we're contributing with into global trade is a lower cost to ship a commodity, dollar per ton. And as long as you're investing on the same side of an economy of scale in the biggest ships, we believe that you can survive downturns more than you can if you are outside economy of scale. So the Ultramax is a dry cargo ship. It has cranes, and that makes it the biggest craned dry bulk segment. Whereas if you have a Capesize, that's the biggest ship without cranes. So I think economy of scale is important. So that was number two.
Interesting. But in that perspective, does it also mean that you maybe get lesser volatility on the upside as well in the dry bulk space, since you have those kind of Ultramax ships? Or so if you have like a fleet of just Capesize, big Newcastlemax, is that like a different play?
In a way it does. If you look at in an upcycle, usually in dry bulk they all correlate, and you can say a bit simplistically that in a good market every ship floats, older ones as well. So it's actually when the market is not very good, it's interesting to analyze the earnings. And the Newcastlemax also ticks the box on economy of scale because that's the biggest ship without cranes. So I think if you look back the last decade, you'll actually see that those two ship types are the ones who perform the best. The volatility in our segment is lower, and we believe that that's a positive, because if you look at the average rates a ship has earned over the past decade, for example, you see in some of the bigger ships that actually the average rates is surprisingly low compared to what it costs to buy the ship, and the volatility is tremendous. So I think over more than a short period of time, the risk reward is actually better in the Ultramax segment. But then again, when the market is positive, every ship floats. So yeah, and it's actually been a pretty, especially since last time we met, there's been an extremely positive market, and actually the last 5 years have generally been quite okay.
Going back to defining your competitive edge, it also looks like, simplifying the business has been a key word. You mentioned the fleet, of course, having the same ship, but also in the structure of the company, you divested a bit in the lighthouse. Can you talk a bit about that process as well? Is that also been like important strategic decisions to simplify the organization as much as it makes sense, of course?
Yeah, over the past year, or 2 years, we have done some measures to focus and simplify our business. But then again, 6 years ago, it was not the opposite, but it was more the focus to actually just grow the company. And at that time, there was a ship owning company, there was a technical management company, a crewing company, and also with the merger with the Lighthouse Group, we Belships acquired an operating company in Asia. And when a company in terms of market cap and assets is small, as we were at that time, I mean, before the merger, we had 6 ships and a market cap of $30 million. After the merger, we basically doubled the fleet to 16 ships, and the market cap was about $100 million. And to go from there and then develop the company, one of the things we decided was that it's very tempting sometimes to simplify a business a bit too early because it looks more streamlined. But we wanted to use every source of growth we had and try and develop it. So we started buying ships, but we also managed to attract more ships to the technical management company and crewing management company we owned. We actually doubled the number of ships under management there. And then in the operating business, we basically during until the pandemic, actually, we actually were continuously expanding the company in Asia. And then in the middle of the crisis of the pandemic and the closure, we were actually able to open a brand new office here in Oslo and a new operating company in the Atlantic region. So I would say into maybe 2 years ago, we were actually growing on all fronts. And then we slowly have kind of adjusted our strategy to focus and simplify it. So we have sold the technical management company. We've also divested our ownership in lighthouse navigation in Asia. And we've increased our ship owning further. So in a way, you can say we've crystallized the ship owning part of our company. And we now, outside ship owning, we actually just have one ownership stake in Norwegian Bulk, which we share an office with here in Oslo. Having said that, both the technical management company and lighthouse navigation, we are still very closely cooperating with both as clients. So all of this has actually happened in a very active, dynamic, and friendly way while we grew it. And also, I'm happy to say, after we made the decisions to divest those companies, we are very closely cooperating still today. So yeah, for us, it's right now it's a more focused company, but then again, it's bigger in the market cap and number of investors. So in many ways, we've achieved what we could set out as a strategy 6 years ago, and then some. And then future remains to be seen what we'll do next. But so far, we're very happy with how the company is developed.
Super interesting. So one important part of the Belships story is, of course, the aggressive growth and very attractive financing. And I know before you came into Bellship, you worked at Fearnleys with, purchase and sales. So obviously you have seen a lot of deals and know what a good shipping deal is. If you just go by the first principle first for people who are curious, what makes a good purchase in shipping? Can you sort of explain the fundamentals when you look at deals and what exemplifies a good purchase when you're looking at ships?
Yeah, that's a good question, and I'm not sure I have the precise answer. But to put it simply, you can, of course, to make a ship investment, you need financing and you need an operation, i.e. a cost base afterwards to compete on. If you're able to buy a ship in the lower part of the cycle, so if you're able to buy a ship cheaply, that can help you disguise bad financing or maybe even a too high cost base to run it. Oppositely, it's a bit difficult to escape. If you buy a ship way too expensively in the high part of the cycle, you're going to have to work very hard with financing and cost to disguise the fact that the ship was built or purchased a bit too expensively. So I think a starting point is many good shipping deals have been done on the basis of a holistic view on where the world economy or the shipping market is heading. I think for any shipping company, especially a ship owning company, I think one has to have a very solid, clear view of what is one's competitive advantage. And that can change from year to year, a period, and it might change several times in the future of any developing company. But to have a clear view of what is the competitive advantage. So, for example, to constitute a good shipping deal, I think that first and foremost, a view of where we are in the cycle. Not necessarily at the top or at the bottom, but you have to have some view and conviction towards which end you are.
Interesting. Have you been involved in some terrible deals that still give you nightmare, or have you been lucky to only been part of good deals?
No, I think in Belships we've been fortunate actually to have the market with us, and I'm happy to say that we've been set up in a way to survive more than one outcome. So actually I take a bit of pride actually that we haven't had one sour ship investment deal, actually sale or purchase in Belships, which has ended up in a conflict. So I think that's also a point of learning from, which is worth taking in shipping, is that you save a lot of money and grief by choosing your counterparts and trying to find transactions and contracts in a way that you avoid disputes actually. So I'm very happy that we've avoided that. During my shipping career, I've seen a few, but I've also, ever since I started in shipping, I think I've been a curious person. So whenever I met ship owners or investors, I've always been active to ask questions actually, to learn how are they doing their business, why are they doing it, and what is their thinking behind it. So I'm not sure they knew always, but I was kind of interviewing them for my own knowledge and experience. So a lot of what I've utilized in Belships is actually things which I've learned. And one sour deal in a way, but ended up a rather decent one, was with a client in Fernleys, and this was early 2008. And he bought a very old Panamax bulk carrier, 25-year-old Panamax bulk carrier at the time. And obviously in hindsight, this was close to the peak of the market. And the purchase was done, I believe it was in May 2008, so it was actually right before the market burst and the financial crisis played out. And while we were negotiating the purchase of this ship, we found out that the current charter of the ship was interested to continue. And this Swedish ship owner, he asked me to investigate what they would pay to continue. And this was a very well-known, well-respected, reputable counterpart charter. So we established contact with them, and we investigated what they were willing to pay for a 2-year contract. At the same time, as it had, there was a market out there who was interested in these type of ships, also for 2 years. And if I'm not mistaken, if my memory serves me correct, there was one charter in the market who was willing to pay more than $60,000 for 2 years. And the existing charter was there to pay considerably less, maybe around $55,000. And I made the call to this ship owner and I presented them with the two alternatives. And he chose the bankable, highly reputed charter at the lower rate. And he made that decision in that phone call. And that ship was taken over in the middle of the financial crisis. It was chartered out for about $55,000 for 2 years from this great company. And they performed the contract for 2 years and redelivered the ship. And it was a fantastic relationship. And that contract almost compensated entirely for the fall in value of the vessel. And I think I took away a lot of learning from that transaction actually. So both in terms of risk and judging alternatives, and also the the greed, when the greed is there in the market where things are inflationary in all aspects. He was a very wise investor, that Swedish guy, and I'm happy to say I spoke with him not too long ago, actually. So
that's a fantastic story. It's almost like shipping in a nutshell, almost like.
It is consequential alternatives and choices.
Yeah.
Yeah.
But looking at, talking about, buying ships. So a very important part of the Belships story has, of course, been your relationship with Japan. Can you tell us why you do so many deals with Japan, what makes it a unique partnership, and also the financing you have been able to get, which seems extremely attractive?
Thank you. Well, I think it starts with a company's competitive advantage and our analysis and view of what ours was. And 6 years ago, when we decided to expand the company, we had certain competitive advantages. One was that we were stock listed, which gave us an ability to finance ourselves with a wide range of credit alternatives. We had the management companies, technical and operations, everything in-house at that time. So we had the ability to take on ships and take on that growth. And then the question was where to buy and where to build. And from previous experience, I've seen how Japanese-built ships are cheaper and more efficient to operate. I've seen how when they age, they hold their value better. So the quality aspect was one. Number two is that the shipbuilding market in Japan is part of a circle where you have shipbuilding, but also ship financing, and then you have the charters or customers, and they are all for decades actually set up to cooperate in order to facilitate the ship export from Japan. So they have the quality, and then they've added a system which creates the fundament for financing these ships. And then a company like us, Belships, we step in and lease the ships for a long period. So all this comes together, and it actually it forms the core of our strategy and our competitive advantage. This is our biggest competitive advantage: the ability to have access to the best ships in a world and market where the number of shipbuilders are actually decreasing. So that's number one. And then the financing of it, we've focused on this for a long time. And then you can also add that generally Japanese and Norwegian, we cooperate very well together. We have a meeting of minds in a number of aspects, and this creates a lot of trust and efficiency when it comes to making contracts and entering into new business. So it's also one of the reasons why Belships are able to, as a company, we're able to keep the number of employees lower, actually, because we have very little issues with the ships. They're high quality. We have zero issues with our counterparts and friends in Japan. We just don't have disputes. So all of this creates a very efficient and frictionless relationship. So, I mean, in Belships, we're less than 10 employees. And if you add the number of purchases and sales of ships and new buildings and finance structures, I think we're well past 50. So, and a big reason that this has been possible is that we do this in Japan. We have a very efficient and smooth way of working together. So that I would say that's probably our biggest competitive advantage.
Is it possible to state why Japan has such a high quality on ships that is hard to replicate from other nations, or is it just craftsmanship compounded years over years that makes them, in maybe your opinion, the best shipbuilders?
Yeah, that's a good question. I think one of them is that, I mean, also in other sectors, Japan has been able to standardize products of high quality. So you can look to other sectors than shipbuilding. Actually, you can look to to electronics or automobile industry as well, that Japan has a competitive advantage in terms of putting together quality products, and in series, I mean from manufacturing. So, and they've also, like I said, with the ship financing, they have been able as a country to facilitate exports. So I mean they are an island, so they are importing a lot of commodities for energy, for example, or other consumption, and then one of their exports has been shipbuilding or automotives, electronics, and so forth. So I think they're very well aware of their competitive advantages and very capable of creating efficient and high quality in the circumstance of ships, for example, shipyards which are able to build very high, a large number of series of ships which have been popular in the market. So this, I mean, for us as a Norwegian company and European customers, this goes back to the, let's say, the 70s, when the ship exports really started being a growing industry. And then other countries have started to replicate, and shipping developed into, after Japan, Korea of course built a shipbuilding industry, and then of course China. But Japan have never lost the grip on its part of it. So so we're very fortunate to be part of that, and we take it as an active part of our strategy. Actually, the Japanese ships and financing.
How do you calculate or decide how many new builds you want to build in Japan and lease? Because now 12 is the right number, right? New builds coming out?
Yeah, correct. We have, at the moment, we have about 30 ships on the water, and then we have 12 coming. So the decision to the exact number, that, I mean, going back 6 years, it was actually, we wanted to grow the company, and we were well past 20 ships, and then 30 ships. We actually wanted to take as many modern resale new building ships as possible, and there wasn't that many available. So you can say that I think especially during that period in the pandemic and in 2021 into 2022, we felt at least that at the time there were very few buyers chasing these ships, but there weren't that many available. And it's coming back to the falling supply of new buildings. Actually, back to 2017-18, it's been a aging fleet on the water, and then a lower amount of dollars invested into new buildings. So for us, we haven't had a fixed target of that many ships is what we need. We had an ambition after the merger where essentially Belships fleet was doubled. We had a loose target, just that we wanted to double it once more to about 30 ships. And the reasoning behind that is that if you have 20-25 ships or more, you have usually a big enough amount of scale to be competitive on a cost base. And then we were able to control about 30 ships, and then a year and a half ago, or a bit less than 2 years ago, we made a decision to start a new building program. And the thinking behind that was that, okay, the whole fuel and technology green shift topic had been ongoing for a long time. It had, in a sense, paralyzed a big part of the shipping market with a sort of wait-and-see attitude that everyone was kind of going to sit on the fence, not invest in new ships before a new fuel or technology appeared. And in that vacuum, we saw an opportunity to actually just buy all the existing brand new ships out there. So second phase of this was that, okay, slowly there was developing a more busy new building market, not least from other shipping segments. And then again, back to Japan, we had the chance to develop a new building program and get it fully financed, 100% actually in Japan. And we made a decision that, okay, are we gonna continue contract existing diesel fuel engines and ship designs, or should we wait for something new? And we were pretty confident that we keep buying the brand new ships out there today, and it's come to now 12 new buildings, which we're going to deliver up to 2028. It started actually last month, the first one, and the last one is set to deliver towards the end of 2028. So, and even now, if you ask a shipyard, they'll now be offering you 2029 delivery. And that is unprecedented. I think there's never been a point in time where there's been 4 years waiting time for a bulk carrier. So there aren't enough ships actually to make too many calls, I think, on what the right number for us is. We're still there to grow a bit. And then I think it's interesting how this backdrop with technology and fuel has evolved over the past 5 years.
Do you see any signs of what to come in terms of fuels and new technology, or still way too early to know what the fleet will look like if it's supposed to go towards a net zero or something that's close to it?
Yeah, I'm not going to predict too much, but I think that on the positive side here, you have a shipping market which is extremely global and in terms of capital risk willing, and there is an underlying force of economy of scale contributing to actually falling transportation costs over time. So there is a positive backdrop here. In terms of what is going to be developing, I think economy of scale is the number one, and then there is a lot of interesting things happening with new fuels, especially in the smallest ships. If you looked at the domestic trades with, for example, here in Norway, if you look at ferries, for example, double-end ferries or cruise ferries, this is something which started developing 20 years ago, and it's probably the most interesting place to actually look for innovation. In the deep sea side of shipping, I think there has been a big part of the market has seemingly had a wait-and-see approach to this, and there has been at certain times a topic that everyone is waiting for some new technology to appear. I've seen it a bit oppositely, that actually this technology is already there. You can burn several different fuels today. It's been transported before, everything from ammonia to methanol, even hydrogen. All of this is actually available in terms of technology. The truth, and maybe the difficult part of this, is the truth is that the market just doesn't want it. And then you can ask why it doesn't want it. And I think that it's difficult for such an efficient and demanding market like shipping. There isn't any capital to waste on this, while if you, for example, look at some of these new fuels, the economics and physics behind it is that you have to kind of use sometimes 2 units of it to create one. And if you look at oil and diesel, it's very, very opposite, where there's a much higher return on energy, to put it that way. Mm-hmm. So I think that some realism is needed. That it's more a question of markets rather than technology. And I think that, and again, back to Belships, our thinking was that, okay, this is going to take time. This is going to take much more time than the general impression you get if you listen to politicians and government bodies. So we think that it's been exaggerating how quick it's going to happen. So this is also one of the reasons why we made the decision to actually just push forward, buy the most new available vessels out there today, and we also got rid of every single older one. So we didn't want to sit on the fence with an aging fleet. So we want to be there, be a well-reputed, serious company in the market representing the newest ships out there. So I think that's been a central part to our decision to actually be willing to still contract actually more ships of today's design. And I think we have the most modern Ultramax fleet out there today of any. So this gives us hopefully reasons to be an attractive ship owning company in several years to come, while this continues to unfold with fuels and technologies. But I think as in reality it's a question of the market and whether you have carbon taxes and these incentives to actually shift the market.
From an investor perspective, and I don't know, maybe it's just like a gut feeling, so I'll try to ask the question. Is it understandable for all investors how Belships differentiate from Golden Ocean 2020 bulkers, or does it fall into the dry bulk space, and when the sentiment is good, it sort of ends up in sort of as an alternative? Or is the Belships story crystal clear for the whole investor base as you see it? What makes Belships a bit different in this space?
That's a good question, and maybe somebody else should answer that rather than me.
Just a feeling, like
yeah. I think that both companies you mentioned now here in Oslo, plus Belships, collectively, I think we have made the case very well to defend Norway and Oslo as the base for a shipping company. So I would start with that rather than for me to dissect what people's opinion are about Belships. I would say that all of us are making a case for high quality and competitive, well-run, good governance shipping companies. That's something that we can be proud of from Oslo and Norway. And I think we're generally appeared as also high quality and well-run setups. So I'll rather put it like that. And then I think it's also apparent that we collectively as ship owning companies made the decision to actually go for modern fleets, invest at the point in time from, let's say, from 2017 up to 2020, 2021, there was a real vacuum in the market where very many companies were hesitant to actually modernize and buy brand new ships, and all three of us actually have done a tremendous investment case, and I think we're in the top 3 of all listed companies with the modern fleets out there right now. And I think going back to what's going to happen in this green shift and fuel technology thing, you then have, okay, in our segment you can build 200 ships per year, to put a round figure. 200 ships per year is kind of the shipbuilding capacity for Ultramaxes. And then again, a bit round figure, there's just above 4,000 ships on the water out there. So if you tomorrow just said that every single new ship is going to have some sort of a magic fuel or a battery or a low carbon fuel, every single ship tomorrow, it'll take 10 years to shift even half the fleet. And if that happened, it'll take 10 years, and then the half of the existing fleet which you're shifting, that is the oldest, most non-uneconomical ships. And those are the ones who are going to be replaced first. And our fleet, and also the other shipping companies here and dry bulk companies here in Oslo, we represent the modern end. So I think that that's something investors have picked up, that we've actively taken a decision to invest, grow the fleet, do it efficiently, good governance, a clear investment case, I believe, is there, and then ask some investors.
Yeah, Do you feel the investment case is so good that it makes sense that you're attractive for being sold or for a takeover or a merger down the road?
That is a question to speculate around, but I would say, okay, if you're a listed company, at least I would think so. We try and run it as cost efficiently and attractively we can. And I think you're very quickly, if you're a public company, I think you're very quickly called out if you're running a suboptimal operation in terms of cost or financing or maybe even strategy. So I think if people speculate that something might happen in the future, I would take it as a compliment. Hopefully we're doing something right. I certainly hope that we wouldn't be the grounds of such speculation because we are doing it completely wrong. So yeah, I focus on developing and growing the company, and I can say that in terms of cost base and financing, we're competing with anyone out there, and also with companies which are much bigger than us in market cap and number of ships. And we stack up well. I think we have the lowest cost of financing. If you look at our setup with our new buildings today, the ships on the water, I can't see anyone competing with us on cost of capital and duration and predictability. And our cost base otherwise on running the ships is low. So having said that, I don't mind people speculating, but it's not really my focus. It's more on how can we develop the company and the fleet, and how do we actually do on return on equity. And okay, 2024 is not done, and I think maybe this year so far the Capesizes are top of the list, but in the 5 years past, I think Belships, if not, have been number one actually in terms of total return. So if you look at the share price and take into account the dividends paid over the past 5 years, we've been on top. So yeah.
It's also the attractive part here is that since the new buildings are leased, you have a great optionality as well to take different decision paths down the line based on what's most attractive.
Yeah, and that's an increasingly interesting option for us, because now we have, okay, let's say 29 ships on the water, and we have 12 new buildings to come. So we have one, and all of it's financed. So we don't have to raise any equity or any debt to take delivery of 12 ships. And I think there is no other company, stock listed dry bulk company, which has more than 30% growth lined up without any equity needed or debt financing. And then we can take that new building program and take delivery of it, and it will represent growth in our earnings and fleet. And alternatively, we can look at our existing fleet, and if you then take, okay, we have 12 new buildings coming over the next 3-4 years. If you look at our oldest ship today is 2015 built. That's still a modern ship today, but if you then look over the next 3-4 years, we could sell 1 or 2 or 3 ships per year against the new buildings lined up, and then you have a very interesting capital allocation possibility, where we can sell older ships which have rather low debt, and some of them are debt free, and then we are taking delivery of new buildings which are fully financed. You potentially have a pretty significant amount of capital which can be freed up. So this duality is something that we look forward to considering over the next 3-4 years, and I think we're the only company who has that optionality actually lined up.
Very interesting. So just like some comments on the market side, what are you most curious about playing out for the next year? Because like you said, you can take a very diverse amount of different commodities, which makes it a bit unique. So it's agriculture, minerals, iron ore, maybe the whole thing. How do you look at markets then? Just like, because there has to be a lot of different things that can play out since it's so diverse in commodities. Is that very hard to have a viewpoint on, or do you see very interesting trends you're excited to play out for 2025?
We don't make predictions even for 2025. I think that if you look at the demand side for our markets, it's okay. You mentioned some of the main commodities now, but if we put it very simplistically, we can think of it as commodities going into three sectors, and that's food, energy, and infrastructure. And food and energy are pretty obvious that they're in demand. And infrastructure, I mean, our commodities are going into the steel and concrete cement industry, for example. I find it hard to kind of see that the need for food, energy, and infrastructure has a bad backdrop in a world with a growing population. And if you look at dry bulk commodities 30 years back, it correlates pretty well with GDP growth. And if you zoom out on that, you basically just have two negative blips in 30 years, and that's the financial crisis and a very, very short time during the pandemic. You see GDP contraction. So the backdrop on demand is rather stable. It doesn't feel like that in the spot market, but that's because of a wide range of factors. You have weather, congestion, vessel speed, political conflict, economic conflict, tariffs, all of these things. So that influences the supply and demand of ships, and that's why you see the rates go up and down. But the backdrop from the demand side is actually very, very stable. GDP correlated, and the world's population is growing. And then if you look at the supply side of ships, okay, there is always the risk of having too many ships constructed. But right now, it seems that we are approaching a situation where the supply of ships is actually very, very, very low. In historic terms, it looks like the lowest ever. And this, I think there are several reasons behind it, but one of them is actually, ironically, the green shift has actually created a lot of confusion and wait and see. So you have an aging fleet, and then you had a decade of lower markets after the financial crisis. So you had closure of a very high number of shipyards. So today there are less than 20 shipyard groups actually building bulk carriers. And if you look back 10 or 15 years, you could time that by 10. So closures and consolidation to a certain extent have reduced the supply side. So all of this leaves me to expect a scenario where I don't know necessarily what's going to play out in 2025, because you can easily see a scenario with lots of trade wars and conflict in the world and rising interest rates that is toxic to any market which is capital intensive, including shipping. So the rising interest rate is, together with a number of other issues, can affect 2025. But over the next 1, 2, 3, 4 years, with the backdrop of world GDP, the world's demographic growing population, and the supply side, I still see shipping and especially dry bulk as an interesting investment. And then the way we've set it up, I believe, makes it even more interesting, because we can basically, as I mentioned before, we can basically be patient over the next years without having to dilute our company's shares, because we don't need to raise equity to finance this growth. So I think that's the kind of the long-term view that we believe in the investment, and then you can have all sorts of things kind of influencing this short term, and they tend to be surprising, but they can be surprising both ways, and that's what we saw after we met last time. We had a tremendous market actually coming out of the pandemic. It was more positive than everyone expected. So we can be patient, and we have the optionality to I think play this over the next 1 or 2 or 3 years.
Yeah, very good answer. So another topic for young professionals tuning in, listening to you telling stories, explaining how you build Belships. What are some advice you can give people who want to have an interesting career in shipping? I mean, from my point of view, it seems like you have a very interesting combination that you both went out on the seas and you also did the business part. So you have like a fantastic combination. Do you think points like that can make a difference in building a career to make you stand out?
Yeah, good question. For me, it represented a strong interest into the shipping industry, and this. I mean, it's very obvious to see now, but the shipping interest for me started when I was in the teenage years, and then everything after that was influenced by that shipping interest. So my focus was extremely narrow. The interest in shipping was so overriding that I was only looking for that job and for that experience. So. And for me, that helped me, again, coming back to competitive advantage, for me that fueled my ability to compete with others who were better in school or had better grades. But I had one advantage, and that I knew what my interest was. So I think that one advice, I wouldn't call it advice, one takeaway from my experience is that interest often trumps qualifications. If you're engaged in something that is a bigger advantage than some qualification on a piece of paper. So I think that one takeaway there is to try and go with where your interests lie. Maybe more than focus on an outcome. So I mean, it's the same. If you wanna, your goal is you can't have a goal to be rich, and then you start working with stocks. You have to. I think the best people at something are the ones who actually go with the interest first, and then the outcome is whatever it is. So that's certainly been the case with me. So I was lucky to be exposed for and find my interests early. And then when I first was in that position, I mean, I was 22 when I entered the doors of Fearnleys the first time. I knew at day one that this was where I wanted to be. And like I said earlier with the ship owner story from Sweden, I mean, I've been asking questions and interviewing so many people in the segment and in the sector. I mean, within shipping. So yeah,
and that gives you the stamina as well to keep compounding the knowledge and experience as well, right?
Yeah, stay curious. But I think that you also naturally stay curious if you're interested in something. So yeah, it's difficult to focus on outcomes. And I think if you're 22 or 25 years old today and you start focusing on outcomes, I mean, it must be overwhelming. Then I think you take on more pressure and you actually reduce the chance of, yeah. So I think many people are lucky to be exposed and find an interest in something early on. And that's maybe the most important. So get out if possible and get some work experience, or that'll trump, that'll beat. It's better to have a B or a C and some work experience than straight A's and never had an experience outside school.
Yeah, I couldn't agree more. So isn't
there a saying I heard once that A students start reporting to B students working in companies owned by C students?
I think that's, and maybe that's, there could be some truth in that, I think.
Yeah.
So last time I also asked you for some book recommendations, and you had some. Have you read anything new since last time we spoke, or are we going to reference the previous recommendation in books people can read? Or do we have any
was it Animal Farm, George Orwell?
Yeah,
I believe, after following the election and general topic in the media over the last year, maybe it's time to read 1984 by the same author. So I'll probably recommend that one.
Yeah, I'll link to those books as well. And just like, do you have any final reflections? I mean, we touched upon a lot of different aspects, and I truly appreciate it. So do you have any words you want to close with, or do you think we made through the most important topics?
Yeah, I'm happy to hear that. Well, let's meet in 2.5 years and see if it stands true then.
Yeah, perfect. Lars Christian, thank you so much for taking the time once again. It was an honor to have you.
Thank you. Pleasure.